Hello guys, hello, good morning once again. This is Mr. AFX out from Alfron's Trading Academy. So make sure if you're new to this channel, make sure you subscribe, you like, and give it a thumb, yeah, a standing up thumb, and then follow. So guys, so today I want to take you through MSNR, how we are going to trade next week. Today is Friday. It's Friday of September. It is 19th of September 2025, Friday. So I'm taking you through how we are going to trade next week. Okay, how we're going to trade next week. So let me first remove these 5 drawings. So with no waste of time, we trade MSNR, ICT, and this is our trading strategy. Okay, MN, we trade MSNR, SMC, and candle range theory. So today I want to take you through. So if I start with I'm on a weekly time frame, I mark my POIs. I mark that first, like my point of interest. I also mark this as my POI. Okay, so I mark that as my point of interest. So we are going to see that in a daily we have market has hit this point of in a weekly you have this mark point of interest, which is the what, A level, A what, as we said, we normally, if this is our A level, something like this. Okay, we need, if this is the zone, something, if this is the zone. So what do we need in lower, either in lower time frame or higher time frame? We need a rejection candle. Market comes, does that. Okay, breaks below, we enter either in a QM. So this is what we normally need. So for this time we have this level, and it is in a weekly, and we have a weekly to weekly rejection which is forming to the downside. So where do we mark our point of interest? We are marked this. So this is a previous weekly low. It will act as a liquidity. Okay, that one will be as a liquidity. So you have already seen our zones of interest. Okay, so with no waste of time, since we have that, I can literally go to 4 hours or 1 hour. Okay, let me go to 4 hours. So if I show you this, okay, if this, we are going to look for this formation as market is reaching our point of interest. Okay, yeah, so as market is reaching our point of interest, what do we need? So we need the other formation we said, last A level to be made before market reaching the point of interest. So this time, if I go to lower time frame, I'm going to see that this is an A level formed. Okay, that was an A level formed. Also we have this, this is a level. So this time we need V levels. Okay, we have also this, also have that. Okay, so which one market we expected market to break? We wanted market to break this with a strong momentum, and then we look for sales. So this is the last V, A level, and then the last one that is broken is the A level. This one is the A level, and then this one is the what, the V level. Since this one is forming an A, this one is forming a V. So with no waste of time, we go back to our what, candlestick. We are going to see that market tapped in this point of interest with a weak rejection. This was FOMC news on Wednesday. Yes, we had FOMC. So FOMC, FOMC. So we call it FOMC in short. So when market came and closed below this this V level, we wanted market to come back to this QMO, the last A level formed for our entry. That's why we are in for this trade. Okay, that's why we are in for this. This was the entry. Okay, this is the entry. So where is your first target? Just below this, at this what liquidity, at this previous week's low. So your stop loss just above the what, the QM, something like that. So that's one. So which means would have been dropping in profits. So if you go to 1 hour, it gives us a clear picture in 1 hour. Okay, in 1 hour we had this, you had this level. Okay, but for me I use the 4-hour level for my sales. Altogether, this is what we call trading. Thank you guys.